G'day there, welcome to the closing bell on the 29th of October. The year nearly over, thank God. What a year it's been. Now, last week I had a bit of a chat looking at really long-term moves in the US bonds. So I thought this week I'd just have a look at the NASDAQ and the S&P from a very long-term view, just to give you a sense of what can happen in these corrections, how far along we are at the moment, just to give you a sense of, how much more we may have to go if we're going to see something similar to what we've seen in the past, over the last 50 years or so. So let's just kick off with the NASDAQ to start with, because look, we've had Amazon came out on, it was Friday morning our time, with some results that, look, they looked all right, but they were under what the market was expecting. Margins under pressure on their international business. Also the North American Amazon business, really the margins under pressure too, post the COVID spike. And their AWS, of course, is the thing holding everything up. Just a money machine, that one. But their stock price was down 20% in the overnight market. Don't know what happened on the Friday night, of course, you do. But we're starting to see these fangs drop away, aren't we? One by one. Meta, I think we've all slowed down our use of Facebook. I know I have. I rarely post, and every now and again I check in to see whether an old school friend has caught up with me. But apart from that, the excitement of Facebook's worn off for me well and truly. And they're investing a huge amount into their metaverse, which I tried on some virtual reality goals and played a game up with my nephews in Queensland recently, and wanted to throw up after about 5 minutes of wearing the thing. So I don't know whether that's going to take off anytime soon. So they're looking pretty bad, and Amazon falling over, Apple looking all right. But, these big tech companies that have held up that NASDAQ for so long, I mean, that is an overcrowded bunch of trades, that one, for every hedge fund under the sun. So if that starts to tip over, that can be something that ignites another big leg down. So let's just have a look at the NASDAQ from a very long-term point of view, have a look at the past few corrections, and also look at the S&P and just get a sense of where we are right now. So here is the NASDAQ looking all the way back to the mid-80s when it kicked off. This is a log chart, and this is an important point. When I look at very long-term charts, I want to look at the log chart because that means that pretty much every distance on this chart, the same distance is the same percentage move rather than the same nominal move. So you can see here, the pricing here around 800, there's 400. So that's a 50% drop in the price going from 800 to 400. And if we're up here, going from 16,000 to 8,000 is a 50% drop. So you can see that that distance is exactly the same. So that's what the log chart is doing. And it's a very useful thing to look at when you're looking at very long-term charts. So we can see here the whole history of the NASDAQ. And I'm just putting in a tentative, long-term trend on this thing, looking at the lows that have been created over that period. And what I'm looking at for you here, where you've got these lines there, I'm just looking at the sell-off from 2000 to 2003, also the sell-off from 2008 to 2009, and just overlaying that to the current situation and saying, well, what has happened in the past and where could we be in this move? You can see that move from 2000, the real collapse, to 2003, I mean, that was a hell of a move, wasn't it? That would be equivalent to a collapse from 17,000 down to around 3,000 in the NASDAQ. I mean, I don't see that happening this time around. That is just a complete implosion. But the blue line you can see there, and I'll actually just get rid of that black one for starters. The blue line being the move from 2008 to 2009. So where are we in that? You know, here we are with Amazon just coming out with terrible result, Meta in free fall. Are we going to break through those lows? You know, there could be another leg coming. So, you know, I think that's a fair approximation. I mean, you know, what happened in 2008-9? We're now in a situation of these tech stocks, which, you know, fed on the long-term expectation of having cash flows, very sensitive to interest rate moves, as you probably know. So, you know, we're seeing the heat come out of that. And I don't know whether the hedge funds have really dumped those stocks in a big way yet. So there's still maybe more to come. Certainly the trend is down. And with last night or a couple of nights ago, we saw, you know, NASDAQ was down nearly 4% in the overnight, including the overnight market after Amazon results came out, was pretty bad. So where it is right now, you know, on that, just the weekly trend you can see there, definitely the weekly trend down. There's that 20-week, 10-week well below it, and getting rejected from the 10-week exponential. We have had the weekly buy pivot. So, you know, I'm well aware that it could end up finding buying pressure. And if it does do that, I'm going to turn bullish. So this is where it sort of gets interesting, getting up close to what's happening right now in that NASDAQ and watching this next few weeks trading, everything pointing down. The only thing pointing up is, that weekly buy pivot from last week. That's your one thing that you're sort of hanging your hat on, is a false break of that low from June. Weekly buy pivot. It's like, okay, this can turn up. So what is setting up here is if we get weakness next week, but it doesn't take out the correction low, and it turns up and breaks out above the high from this past week, that would be a pretty good indication, I think, that we are going to see a bit more upside. But if things turn ugly, if the selling pressure comes in, and, you know, especially if we get a weekly sell pivot next week, for example, then that would be saying, okay, watch out from now on. And yeah, breaking below the low of the correction, that is certainly saying, yeah, watch out from here on in. So really, you know, short term, you can say potentially something is building to rally, but with the fangs starting to look pretty scary and results starting to come out now and stocks really getting hit when they disappoint, there's not much holding this up. It's a pretty gutsy play to be getting long now, but often that can pay off. But for me, I'm just going to wait, and I've got sort of a couple of lines in the sand, you know, on this range now, saying turning around back above there. Okay, watch out. A bigger squeeze could be on, and that is based on, you know, the Fed coming out saying, oh, we're going to slow our interest rate increases. Whether that will save things as earnings start rolling over, I'm not so sure, but plenty of people just itching to get long the market. So, you know, we could end up seeing a bit of a spike based on what the Fed comes out with in mid-November with their rate. So it's very important watching this next couple of weeks, what happens there with the Fed. And yeah, still big picture, watch out. So moving on to the S&P 500. So again, you can see here a long-term logarithmic chart of the S&P 500, the monthly. This is going back to 1900. This is 120 years of data here. I've again put a little trend line there going through the lows that have been created after crashes, sort of very long-term trend that we can see going on there in that S&P 500. And what I've done is overlay the sell-offs up here, which are the sell-offs in 2000 to 2003, 2008, and then 73 through to 74, sort of the biggest sell-offs we've seen since the 29 crash. And we're just looking at what's going on up close to get a sense of where we are currently in this sell-off with that S&P. So hopefully you can see there that it is tracking quite nicely, all of those three really, isn't it? With this being the 2008 crash, this being 73, 74, and this being 2001 to 2003. So if we're sort of looking at it from that point of view and thinking, you know, what this could be, if we equate it to those, you know, we're sort of giving ourselves the potential from the S&P to head down to that zone before really finding the buying pressure. And if we're looking at the very long-term trend, you're also saying that it could be heading down to that area. And, you know, down there, then you're starting to look at value. So, you know, that's still a long way down from where we are right now. And just going in nice and close, and we'll even just get rid of that, because I think you've got the sense of what I'm talking about there, looking at those past moves and the fact that the current move really is tracking the pace of those declines quite well at the moment. And what I want you to focus on again is on that monthly chart. And this is one of the major points when I'm looking at these markets turning down. You know, I'm waiting for the monthly sell pivot because I'm watching the highest price candle all the way through and saying, right, I need a monthly close below the low of that. So there's your monthly sell pivot. That was my prior warning. And I then need to see a monthly close below the low of that sell pivot candle to do what I call that first key bar down. And I make calculations off each bar as we go along those key bars. So the next key bar in the move is then a monthly close below that bar. So last month's trading was the next key bar down in this move. And what I want you to imagine is if we just got rid of, you know, everything but the key bars, imagine just wiping that one out. That's not a key bar, not a key bar, not a key bar, just wiping out the ones that aren't key bars and just imagining what you see. Then you see this stepping down process of selling, few months of work, next bit of selling, few months of work, next block of selling, you know, lots of volatility, next block of selling. And then we've got the rally, you know, going up into selling pressure, a similar thing. So there's no sign from that point of view that this is over by any stretch. And you're looking at the range of that monthly key bar down and saying, you know, where is the selling pressure going to come in? You know, around that midpoint, around the sell zone. So there's still plenty of areas of resistance in this market. And it's not really trading anywhere where you're saying that's under threat from the monthly point of view. So on the bullish case, if the Fed comes out and says, yes, we're going to, you know, lower our rate rises to 25, let's say, from 75, I mean, that's going to ignite a rally, isn't it? But that is going to go up into pretty serious selling pressure. So I'm still looking at it from that point of view. And certainly as earnings are rolling over and the fangs are starting to get hit. So there's really, I guess, the key zones of resistance. You know, you really are looking at that 10-month exponential to 20-month simple, you know, around 4,000 up to 42, 4,300. You know, I'd expect it to fall over. If it does rally, I'd expect it to find a lot of resistance around there. But you know how these things move. I mean, if it really wants to kill everyone, we've got this whole wave down. You've got to be prepared that it can go up into the sell zone of that wave. So 75% retracement before really tipping over into the proper crash. I mean, I've seen that happen plenty of times. So you are really ready for any eventuality here. The Bulls and Bears are, I think, having trouble. I know that from some of my hedge fund trader friends and those sort of things, what's going on, that everyone is itching to buy this thing, trying to capture the pivot by the Fed. But things are slowing down, and I think buying that pivot could be a mistake. The way I'd see this is what I've just really said of, if this buying does turn back up again and a pivot and the Fed gets everyone excited, that could be the one that is your chance to get short for the recession trade and earnings coming off. And then the real opportunity will be, lower down the track, 6 months or whatever away. So that's really how it is. It's a very difficult time to be trying to predict markets, that's for sure. I want you to just keep focus on that big picture, the monthly downtrend. There can be some upside if we look at that weekly. So that weekly chart in the S&P, getting hit from the 20-week pretty hard. What happens here? Does it turn back down quite rapidly? We've got the weekly buy pivot, so you'd expect there to be buying pressure on the sell-off. And this is what I'm saying, that it could do that and then turn back up. And that's when I'd be starting to get really bullish, going back above the high from this week. That could be a story for next week, no doubt, based on the Fed. But danger if that doesn't happen and this thing just rolls over and that weekly downtrend reasserts itself. I just want to show you the daily quickly. Just on this daily on the S&P, a while ago on October 1, actually, I was telling you, look, what often happens around really important technical levels is some sort of distribution will form, which basically stuffs everyone up. So there's that major low from June and a big bear market rally out of there. So once it falls over, that's really what everyone's eyes are on. And in the end, you can see it breaks through it, right? Creates that range and starts creating that distribution. And I've been telling you that with these distributions, if you're looking at this as a downtrend, you're looking at the false breaks of the high of a range as the point with the best risk reward to enter that trend. So this is now set up on a daily basis of creating this range around that very important point and of having a false break of the high of that range really on Thursday, creating the daily sell pivot. So on a very short time frame and looking at this downtrend still well and truly in place, you are looking at a point where if the selling returns straight away here, it's certainly looking dangerous, and down through that low, very dangerous. So look, I don't know how helpful I've been today. I really wanted to show you a really big picture that this can still have a long way to go on the downside. It's all going to be based on the Fed, whether they want to spark a big rally when they back off from things. So, a lot of weird and wonderful things can happen from here, no doubt about that. But you are still in this downtrend, and you are respecting that fact in a big way, because if you don't, and you just start getting a bit cheeky, trying to buy these rallies, it can all of a sudden really not work out for you. And you look back later and say, well, the downtrend never was under threat. So why was I buying it so aggressively? So that really is the story of the day, is just let's wait on this Fed, the fangs coming off the boil. How does the NASDAQ sort itself out over the next few weeks? If that rolls over in a big way, other stocks are going to follow suit as well. So, yep, stay careful out there, and I will come back with more next week. Cheers.